Hello, boys and girls. By the end of this video, you're going to be comfortable with the story behind the numbers of China Automotive Systems. This was difficult to find on the regular SEC website, so let me show you quickly. This is China Automotive Systems website. Go to Investor Relations, Financials, and then I clicked on SEC filings and found the 10K right about here. Let's dive in so that your wisdom can blossom. Oh, let me change this zoom before we go any further. That's better. I'm not blind, I just want to make sure that it's nice and clear for the video. A remarkably stable balance sheet. Stable and standard. The statement of income. So profitable despite what would make me a little bit uneasy as a low gross margin. This is what earnings per share is looking like over the last 2 years. Statement of cash flows. The cash provided by operating activities is actually increasing compared to last year. Now, we only have 1 year comparison here, but these look like the start of very good trends. It's pulling a lot more cash from its business than the income statement reveals. From the opening move, I'm definitely intrigued. I understand why this company was highlighted by my screener, but I'm apprehensive. Everything almost looks too stable to the point where I'm getting a bit suspicious. In the notes, we have a description. Originally called Visions in Glass Incorporated, it's the Genesis brand of automobiles. Okay, very fun. I've actually geeked out about some of the cars that they've recently come out with. I had no idea. I can't contain myself. Let's look at their latest cars. Oh, this is a website, my goodness. Check out this gallery. Whoa. I wish I could pin this while we switch back to the other tab, but basically this is what's being sold. Try to remember these photos as we go through the annual report. Remember that the item 1 is published by the Investor Relations department of the business, and here they're putting in a lot of effort into kind of differentiate themselves, saying that this company is not a People Republic of China operating company, but a Delaware holding company. To really hammer in the point, we do not intend to set up any agreements with variable interest entities in China. Kind of unfortunate that their name is literally China Automotive. Something that I've personally not seen yet in any of the annual reports that I've been looking at with you guys. A paragraph here saying, as of the date of this report, there is no Chinese Communist Party official who sits on the board of directors. However, why are they so serious about it? Because yes, a lot of their business is being done in China. A whole section called Doing Business in China. The Chinese government may intervene or exert influence over our operations at any time with no advance notice. What is it specifically about this company that makes it so sensitive to China? Well, it's that they actually have joint ventures, they call them Sino joint ventures, that sell Genesis cars directly to the Chinese market. Very important to distinguish that these are joint ventures. Legislation would actually apply to the joint venture and not this entity, this company directly. The question then is, I'm trying to see how much of this business is in China then. Specifically, how many sales. Additional detail that they're giving slowly but surely, specific names for the major customers that together, these 5 comprise 42.8%. Oh, sorry for the whole highlight, but 42.8% of all their sales coming from these people. You'll notice that the very first largest customer, to the relief of potential investors perhaps, would be Fiat Chrysler North America. The rest of these I've been checking are domestic Chinese customers. Shouts out to BYD. Some people, if you guys consider yourselves value investors, very likely to have heard of this over the years. They did include it financial information over geographic areas. Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. Glad that it's here. In terms of net sales, 62.6% of net sales came from China. Very different than what the major customers was giving us a little bit earlier in the annual report, but that's why we didn't just look at that. We kept digging until we found this, and I'm glad that they pulled it up. They must like this, but at the same time, they don't want to be associated with the sell Chinese stocks trend. Going to a section of the annual report called Risk Factors. These are very often prepared by the Investor Relations Department in order of concern that the company has. Based on what they've been writing, they want investors to not be concerned about their relationship in China. So that's why I want to take us here in order to see if there's a risk factor about business in China that they're identifying from their perspective. And if so, is it as high priority as it seemed like from the rest of the annual report? Or are they just doing that a little bit more for show? First risk factor, not related to China specifically. I do see these words, I'm not ignoring that, but the headline's not related to China specifically. 3, 4, no, 5, 6, 7, 8, 9, 10, 11. This is sort of, but it's not, again, not specifically related to the CCP, which is what most people are worried about, not related to legislation. So 15, 16, 17, 18. I mean, they're more worried about short sellers in the public markets than they are about the CCP. 19. Here we go. They give it its own section. After 20 other risks, they give it its own section. And even within its own section, they're not mentioning legislation. They're mentioning the fact that China might be in an economic recession. Well, most countries have that risk. Inflation, definitely most countries have that risk. And then finally, the Chinese government's macroeconomic policies. Not even legislation about regulation, but specifically just general Chinese government. They don't seem worried. Even though this company is recognizing that investors are worried about this, the company isn't very worried about this, clearly isn't very worried about this. Maybe that gives us reassurance that if the experts, the people in the business aren't worried about it, it might not be such a big deal. Or perhaps you could take the view that this company is in denial. If the whole market is talking about this, very concerned about this, for them to just talk about it in one section of the annual report that they know investors are most likely to read, but then not really do anything to back it up with actions, not really protect themselves from this risk, could be a mistake on their part. As an investor, that's really up to you. I'm going to show you a ranking that is either going to be very high or very low. Please pause for a moment or try to guess which one it's going to be before I reveal. This channel is about practicing listening to stories behind the numbers and building an intuition to whether these stories do or do not represent value. Please like and subscribe. Hopefully you get to share these videos in order to see if what you're practicing you can explain. Working with others, in particular, having to verbalize what it is your intuition or gut might be thinking, really can be the difference between quality practice or not. I don't know if I would call this a hot topic necessarily, but it's very real that investors have been running away from Chinese companies for months, possibly going on years now. It spooks me, I'm not gonna lie. CAAS is ranked 3 out of 336 in value for the 2022 season, top 1%. I'm gonna take a shot at interpreting what the Sage Seeds AI is seeing here. The AI has seen 0 changes to the financial picture of this business over the last couple of years, stemming from its relationship with China. That doesn't mean there aren't real risks. What it does mean, though, is that the AI, from all the input data that it gathers, has not seen any effect. With all the partnership agreements going in place, this company in particular is able to shift a good amount of those capital requirements to the joint venture partners that it's very much utilizing. And so this is more of a investment in organizer of car supply chains rather than the actual company manufacturing cars. That distinction has big implications. Lower capital requirements relative to the sales that you're making do boost the valuation ranking quite significantly, making this an absolute stellar ranking for the 2022 season. Let me know your reaction to this in the comments below. Share your wisdom. Share this video.